Hello and welcome to Ipswich's real estate podcast, formerly known as On the Couch with Steve. I'm filling in today. I'm your host, Matthew Taylor-Farrington. Steve's out gallivanting around the countryside. Not sure what country he's in at the moment, taking a holiday. But obviously RBA announcement dropped today, and that's what we're going to be talking about. So I am joined by Steve Beach from Stanford Financial to talk about what happened. So, Steve.
What happened?
What happened?
Well, both Steve and I, great news is we both predicted a rate cut, and hooray, we saw another rate cut this year. So they did cut rates by 0.25%, so brought the cash rate from 4.1 down to 3.85.
Yes. So good news for a lot of households out there.
Yes, definitely.
Yes.
So I guess from an average mortgage perspective, it drops your mortgage repayments, which $500,000 is the average mortgage in Australia, means you save about $75 per month.
Nice.
So almost $1,000 per year as in your back pocket, I suppose, at the end of the day.
Yeah, perfect. And so what else did the RBA talk about? What was kind of influencing that decision? Because I know there was a lot of talk in the market. Some banks were saying it could drop by 0.5%, not 0.25, but they've obviously only gone 0.25.
I guess a couple of factors. Part of the announcement after the RBA comes out at 2:30, and then at 3:30 they do a quick question time, which I'll quickly listen to just before I get here to do this podcast. I was listening to it on drive here. There was a lot of questions about, was it a pause? Was it a cut? Was there a talk about a raise?
Yes.
I guess they did confirm there was only a talk of pause and a talk of cut. They were very confident in a cut, and the actual conversation was more around, was there a 0.5% cut or a 0.25% cut? So very confidently, she announced they did the 0.25, just with some uncertainty that's going on globally, which we can talk about in a sec. But that was a big talking point. But also inflationary data is heading in the right direction. We've finally got both trimmed and headline and median inflation within the 2 to 3% target range. So I guess trimmed inflation stayed at 2.4 as it was last month to this month, but headline inflation dropped from 3.3 down to 2.9. So everything's sort of sitting perfectly in line where they want to be, and we now need to be able to maintain that. So not dropping too low, and definitely don't want to see a spark rise. Yeah,
definitely. And I guess obviously, the media was talking about it, was hyped up a lot about the tariffs and what they played. Did that play a factor in what I guess the RBA board was looking at? Obviously, they're on hold. There's all these negotiations going on, but are they playing an actual a factor, I guess, in what the consideration is?
I guess in the announcement from the RBA, they did use the word uncertainty 134 times.
Yes.
A big thing is so Trump tariffs or US tariffs have played a massive effect in global politics, aligned as well as what inflationary data that has come to us. We probably aren't affected as greatly as say China and other countries out there.
Yes.
But the fact that they did put the tariffs on pause for negotiations and everything along those lines have eased up a little bit. I think we saw in one day we lost over $2 trillion, not billion, but $1 trillion in one day, based on a lot of these announcements. And then when we saw that pause and renegotiations back happening, we saw the stock market and financial sectors, bounce back, which was good.
Yeah, perfect. And I guess, was there any outlook from the RBA around what we can see? What's the forecast? What are they kind of are they suggesting another rate cut? What's happening?
I guess they don't outwardly say that there's going to be another rate cut, but a lot of the data that they did release, and again, they do forecasts where they see inflation moving forward over the next 3, 6, 9, 12 months. There was a spike to see that that trimmed inflation, that 2.4 inflation, potentially go back up to 3%. But based on a lot of that sort of statistical data that you look at, means they're anticipating that the cash rate in Australia should situate somewhere around about 3.4%. As I mentioned earlier, it's 3.85 now, so that's almost another 0.5% in rate cuts. So we are, I guess, all anticipating a further, at least 2 rate cuts before the end of the year.
Yep. Yeah. Well, that's fantastic for some households. All right. So what do we think that's going to do to house prices and the house market? I know we've been chatting to Steve. He doesn't seem to be slowing down. In our last chat before he took off on his holiday, record month again, record result, record sales. Do we think that this is going to continue to drive house pricing the way it is?
I guess particularly, when we talk about Ipswich real estate, like there is no slowing down in southeast Queensland. It's a growth sector. We're seeing a lot of growth in sort of Townsville, the defence, mining sectors as well.
Yes.
Nationally, it's been probably a very slow incline up still in property prices. There was a lot of context around if there was an RBA rate cut today, they're expecting record auction prices to go ahead this weekend, where even myself in the finance sector, we're seeing a lot of people sort of reach out going, I want to know when the next RBA cut is, so when rates go down, people can also borrow more money as well. So
yes, correct.
A 0.25% rate cut, the banks have already announced that they're passing it in full, means on a standard, probably a single person home loan, it probably increases your borrowing capacity by about another $15,000. Yep. Coupled with investment property, it probably can increase it almost like $40,000 in borrowing capacity. So
yes,
when you're out bidding on houses, you've now got an extra $15,000 to $40,000 extra borrowing power just on that one rate cut.
Definitely. And obviously you mentioned there that a lot of the banks have already confirmed they're passing it on, but we were talking just before we come on the podcast that some banks are passing it on immediately. There's maybe one or two that might not pass it on until June or something like that, I think you said.
So I guess the four major banks, which are pretty much they're instantly, the second the announcement goes on, they've already got their media typed up. Is it a pause? Is it a cut? Is it a raise? All these things. So we had ANZ, NAB and CBA instantly raise will drop their rates based on the 30th of May. So it's the last Friday of this month.
Yes.
And then you've got Westpac dropping it on the 2nd of June, which is the Tuesday. So pretty much straight away in line. But the biggest difference is that affects, I guess, me from a finance perspective or from a lending perspective. So as of the 30th of May, I can now use that lower interest rate to work out what people's borrowing capacity is.
Yep.
But they're saying they're going to pass on that rate cut at that point in time, which means it's the following month before your mortgage repayments will actually be adjusted. So they're saying basically, call it the 1st of June is when they're going to make the announcements of discounting rates. Means your July payment will actually
be the one that's impacted.
That's impacted or goes down. So although we've had a rate cut now on the 20th of May, we're talking June before we talk about actually giving a rate cut, July before you actually see it. It takes 3 months for a rate cut to really feel any impact from a expenditure point of view. So that's why a lot of these forecasts are, we do something today that's basically going to affect us in 3 months. And that's why the RBA doesn't meet every month anymore. They now meet only 2 times out of the quarter.
Yes. Yeah, perfect. All right. So I think we've covered off what's happened there, but what's your prediction for the next RBA? So we've got, 8 weeks?
I think the government would love a rate cut. The biggest thing is part of the reason why they are all predicting 0.5% rate cut this month is they probably should have cut it last month to show the impact going forward.
Yes.
I'm going to predict that they'll probably put it on pause just to see what happens with the tariffs and bits and pieces and further impacts and negotiations. I don't think there's going to be a clear, precise outcome anytime soon. So I'm probably going to say pause in June. And I at this stage, I'm going to say a cut in August, but I guess we'll probably talk more about that next month.
Yes, definitely. And I'll leave Steve to harass you about his outcome and we'll go from there. So.
You can make some comments on the podcast, I'm sure.
Correct. I'm sure you'll comment or say something from overseas for sure. All right. Well, thank you for tuning in to the latest episode of Ipswich's Real Estate Podcast, formerly known as On the Couch with Steve. If you've liked what we've talked about today, or if you've got any feedback or suggestions, make sure that you give us some comments and that you like, follow and subscribe.